Welcome back to Currency Revalue. This is your daily window into the unfolding story of one of the most anticipated financial events in modern history, the potential revaluation of the Iraqi dinar. For years, the dinar has existed in a cloud of speculation, surrounded by doubt, rumors, and endless debates. But now, with a groundbreaking announcement from the U.S. Treasury reportedly confirming a time frame for a currency adjustment, the game has completely changed. This isn't just about exchange rates. It's about Iraq's struggle for credibility, the global financial order, and how a nation once dismissed as unstable could soon become a model of economic resilience. Stay tuned, because today we're going deep into what this means not only for Iraq but for the entire world economy. Let's start with why this moment is so different from the years of rumors we've all seen before. Up until recently, talk of a dinar revaluation was dismissed as wishful thinking. Critics pointed to Iraq's corruption, its volatile politics, and its uneven financial system as reasons why any dramatic currency move was impossible. And let's be honest, those concerns weren't without merit. But everything changes when the U.S. Treasury, one of the most influential financial institutions on the planet, steps forward with what appears to be official confirmation. That kind of backing doesn't just add legitimacy, it changes the global conversation. Suddenly, what was once speculation is now front-page news in banking circles, commodities markets, and even geopolitical strategy discussions. This is not a small development. If the Treasury has indeed confirmed a timeline, it signals far more than just a domestic policy adjustment. It tells the world that Iraq's currency shift is part of a broader, carefully coordinated international financial strategy. Why does that matter? Because large institutional players, sovereign wealth funds, hedge funds, and central banks take their cues from institutions like the U.S. Treasury, the IMF, and the World Bank. For years, they've stayed on the sidelines, treating the dinar as too risky, too unstable. But now, they may be forced to reconsider. Think about it. If major hedge funds reallocate just a fraction of their portfolios into Iraqi assets, or if global banks open new investment channels, the ripple effects would be enormous. We're talking about shifts in international trade balances, new flows of capital into Middle Eastern markets, and potentially a redrawing of global commodity pricing strategies. To understand why Iraq might finally be ready for this step, we need to look at the years of reforms that paved the way. Iraq has spent more than a decade modernizing its financial system. The Central Bank of Iraq has introduced electronic payment systems, tightened anti-money laundering laws, and put in place stronger compliance frameworks that meet global standards. These aren't quick fixes, they're foundational reforms designed to bring Iraq into alignment with international banking systems. On top of that, Iraq has fought to attract foreign investment. New legislation to combat corruption, greater fiscal transparency, and infrastructure expansion all signal a country that wants to be taken seriously on the world stage. And we can't overlook the role of international partners. The IMF and World Bank have been deeply involved in Iraq's development, offering technical expertise and financial support. Their fingerprints are all over this process, helping to ensure stability and credibility. Now let's zoom in on what this could mean for ordinary Iraqis. A stronger dinar could immediately improve purchasing power. Imported goods from medicine to food to raw materials would become more affordable. Inflationary pressures could ease, giving citizens relief from rising prices. Over time, higher investor confidence could translate into new jobs, better wages, and improved public services. For local businesses, this shift could be transformative. With better access to capital and cheaper imports, companies could scale operations, compete regionally, and finally participate in international markets with confidence. In short, This isn't just about numbers in a forex database. It's about real-world impacts on households, businesses, and the overall quality of life. But the effects won't stop at Iraq's borders. If the dinar is successfully revalued, global investors will be watching closely. Iraq holds some of the world's largest proven oil reserves. With a stronger, stable currency, its energy sector becomes far more attractive to investors. That could trigger a wave of capital inflows into oil, gas, construction, telecoms, and even agriculture. And here's where it gets bigger. Other struggling economies could see Iraq as a model. Countries in Africa, Latin America, and Asia that battle weak currencies and high inflation may look at Iraq's example and say if they can do it, so can we. That's why the world isn't just watching for Iraq's sake. They're watching because this could set a global precedent. Of course, no story of financial reform is complete without risks. Large-scale currency shifts are incredibly complex. Speculative bubbles could form if investors rush in too quickly. Inflation could spiral if the rollout isn't managed carefully. And investor confidence, which can be gained quickly, can also vanish overnight. That's why Iraq is expected to implement this revaluation gradually, with phased rollouts, liquidity management strategies, and extensive public education campaigns. The goal is to build trust, avoid panic, and ensure stability. And make no mistake, this is where international oversight is crucial. With the IMF, World Bank, and possibly even the European Central Bank involved, the plan is to prevent chaos and instead create a smooth transition. So what does this all mean? It means Iraq is on the verge of rewriting its economic story. What was once dismissed as rumor now carries the weight of international recognition. What was once a fragile, unstable financial system now has the backing of years of reform and global cooperation. For international investors, the message is clear: this is no longer just speculation. It's a potential turning point. For Iraqi citizens, it's the promise of a stronger economy, improved livelihoods, and national pride. And for the world, it's a reminder that even in the most challenging environments, sustained reform and global partnership can create transformation. The revaluation of the Iraqi dinar, if confirmed and carried out, won't just mark a financial event. It will symbolize Iraq's re-entry into the global economic order, stronger, more stable, and ready to claim its place on the world stage. You've just heard the full picture on Iraq's potential currency revaluation, the reforms, the risks, and the global implications. Here at Currency Revalue, we cut through the noise to bring you clear, fact-based insights on the future of the dinar and other revaluations around the world. If you found this breakdown helpful, hit the like button, subscribe to the channel, and turn on notifications so you never miss a critical update. Now we want to hear from you. Do you believe this revaluation will unfold smoothly, or do you think risks like corruption and regional instability could derail the process? Drop your thoughts in the comments below. We value every perspective. Thanks for watching Currency Revalue. Stay informed, stay sharp, and stay ahead.